24th of November. Happy Thanksgiving for any of those who do watch this in the US. There's a picture which I've been told I must show. If you think getting home through the London kind of commute was difficult, just try getting out of a city in the US during Thanksgiving. This isn't even Thanksgiving. This was Tuesday night. This isn't, tonight's the busy night. That's incredible. This is basically translated into trading terms. This is the liquidity driving out of the market. Excuse the pun, but that's kind of, you've got to understand the reason why market movement and volatility is so sparse on a day like today is because Thanksgiving is the biggest holiday in the US, bigger than Christmas. This is the one that they, in the States, they all go mad for. So that has a read across, obviously, in towards what your expectations need to be with trading the markets on a day like this. Even when I'm looking at things like the currency pairs this morning, such as cable, you can see, and euro dollar, you've had a quick run lower and then a bounce immediately pretty much thereafter. The dollar as well, a little bit of strength as we came in, broke above its Asian high, then it's come right back again. And I think when the market is in this kind of hiatus, if you like, going into, or what is now a holiday for Thanksgiving, tomorrow is going to be exactly the same. There's no floor trade today, but electronic trade is open, but will be on a reduced schedule. Just means, though, a lack of liquidity will ultimately result in this type of price movement, where you might see a run lower, and then it has a quick snap back. Again, nothing news related. It's just the flow of orders going through the market and a lack of causing the more choppy price action. I would say, though, looking at a lot of these pairs and where they sort of trade at the moment, if you look at pivot, it's not really doing a hell of a lot in cable, and overall in a broader range of things, it's just sitting mid-range. So it kind of spells to me more something that I'd want to stay out of at this point, unless something more, either there's something fundamental that happens, i.e. a news-inspired headline that starts to drive price action, or we get to the lower upper bound of some of the recent range of price action, and then it starts to become maybe a little more interesting. So much has been a theme for the week. I guess it's just about imparting a degree of discipline to not getting drawn into price movement that's kind of quite mid-range, I would say, and being more patient and then waiting for better levels to arise, and then having the kind of expectation that we're looking at fairly narrow, confined ranges, so realistic type of profit targets and sort of duration of how you want to hold those trades needs to be applied. So just as I speak, almost right on cue, just seeing the DAX session low, S&P being held up by the pivot at the moment. And the S&P is one where, again, it kind of encapsulates this range type theme that we've talked about yesterday. Obviously the strategy was to go long again from that previous low, and that was coinciding with that previous record low or record high at 91.50, and that played out quite nicely there, got filled and then came all the way back up towards the 2200 handles. So again today, just given very quiet conditions, I would probably say that 2203.5 will contain the upsides, and then I think the lower bound of 91.50 is probably a bit of a stretch on a day like today, without anything new fundamental happening. So again, it's just about having the flexibility to be open-minded to change your outlook on the day, and therefore your way that you're going to trade according to the current conditions that are at play at that given point in time. So today in particular will be very quiet. Tomorrow will also be quiet, because although some of the US markets reopen, most traders take that day off to have a long weekend. So it's something to keep in mind. From a news perspective, a couple things to have a look at then. Obviously last night we didn't stick around for it because it was going to be a non-event, and that's exactly what happened. Fed officials saw rate hike relatively soon. This was the FOMC minutes. Well, if you look at it, these minutes detail policymakers meeting before the actual election, and they were talking about a strengthening case to raise interest rates as the labour market tightens. Some saying a hike should happen in December, given the fact that the market has not had this kind of catastrophic reaction to the Trump situation. It just means all the more reason then for December to be on the cards, and they were already very firm on that decision in the first place. Obviously this is the chart that kind of encapsulates that thinking. You've got here the white line is the dollar, and we're up at the best levels in a decade. The commodity index has been relatively steady but lifted more recently, i.e. oil's been ticking up in particular, heading in towards this OPEC meeting. We'll talk about that shortly, but gold has come under some pressure, so that's probably going to provide a bit of a top to that move. But what all of this is signifying then is the odds of a rate hike in December. You can see here 100%. I would say the golden rule, nothing in life is 100% guaranteed. Stranger things have happened. I guess you would need something along the magnitude of, I don't know, maybe a seismic earthquake in a major capital city in New York, or a global scale coordinated terrorist attack. Sorry to bring the tone down on Thanksgiving, but that's the kind of thing I think you'd need to happen at this point in order for the market to really reevaluate and for that 100% to drop. Sam North, Arsenal to finish above Spurs is always 100%. Well, I guess some things in life might be 100%. Moving on, just taking a look at the oil situation then. A couple of bullish comments from Iraq helped lift prices yesterday, but then the main kind of news stories we're seeing this morning is about Russia. And just sharing this chart with you because it puts it in a bit of context about how Russia has become a key player in these talks and how quickly they've been ramping up their millions of barrels a day of production. You can see here when Russia and Saudi Arabia reactivated their oil talks, as the arrow is showing here, Russia has in fact ramped up their output. The whole premise being obviously that they want to talk about cutting production in order to boost prices, but all the time Russia has just been pumping at these record high levels, which is kind of just means that it's going to be very more difficult for Saudi and Russia to come to some sort of compromise in order to make a deal, when Russia in essence are capitalizing on the fact that they've been able to talk up prices. So again, still a little bit of caution and indecision about this meeting coming up in the next few days. And looking at oil at the moment, it really has gone into a period of consolidation around this $48 handle. Doesn't really look that interesting, to be honest, at this point, especially with the US holiday now for the rest of the week. Obviously you had the big move up that occurred at the reopening of trade of this week, but I think that this period of consolidation will likely continue to see out the rest of the few sessions, barring of course any snap headlines that come out from sources. But I still think that there's not much that can be said to really swing out of that recent price action. So probably 47.50, 48.50 upside, as that dollar price range is probably either side of 48 is a realistic kind of range. A quick look while we're at the charts. Obviously gold was a big mover yesterday, for the key reason that we broke that big level of 1200. Let me just look at it on a slightly longer dated. Yeah, it was really that 1200 was that that kind of late May of this year, so going into the summer, it offered some incredible support psychologically, technically. When it broke, then a lot of orders, a lot of people, we were talking about this in yesterday's session, a lot of people in the market from I'd say a Wall Street opinion point of view have been talking about gold being at a good price to get back in to initiate longs around 1200, just given the political risk in Europe, the Trump implementation risk. There's just a lot of uncertainty and stresses in the market, which would typically create a flight to quality situation. The Trump implementation risk is important because that ultimately has been the catalyst for the bulk of the downtick on this premise that you're going to get a spike in inflation, and then that means ultimately that the US are going to be, from a Federal Reserve point of view, more hawkish on their policy, dollar strength just weighing down on gold. Now, these are all plans that Trump has. The implementation of these obviously needs to be ratified in the likes of Congress and so on and so forth. It's not so simple, but obviously the market moves and prices on future expectation. The only thing is, it's done that very aggressively, and given the things that are looming, as I say, mainly politically, likes of Brexit, as well as the various European individual country elections, do create some nervousness. We could easily have room to bounce back quite sharply. But a lot of people may have got caught on the wrong side of that. That initial snap of 1200 saw an immediate move of around $12 to the downside. I think it was something equating to $6 billion notional value, which is a phenomenal amount. And it snapped lower. And the key thing is we closed below there and we remain below that number. So again, it's quite interesting around these levels. I know, for one, talking to peers last night, he's definitely a believer that these are attractive points to be thinking more longer term about getting long again. And I think that is a broader consensus amongst most people in the market. But again, that's a longer term trade. Trading this intraday obviously is a different beast. Quick look then at calendar before we crack on, because there is some data coming up at 9 o'clock of importance. First of all, German GDP. We've had this morning. This was a final reading, so the market not reacting to this. But to keep you informed, 0.2% does mark the weakest growth since the third quarter of 2015 for Germany. So all the more reason you would argue that it's kind of inevitable that at some point the ECB are going to look to extend this QE program, most likely in the next few weeks, because that needs to be tweaked on the parameters in order to extend beyond the March 2017 deadline. Looking at Bunds, you obviously had some source comments yesterday that saw an aggressive move to the downside. Most interestingly, though, we've reversed pretty much all of that move, and Bunds once again continue to outperform their US counterpart. Going back to the data slate, so in terms of this morning, one of the main things you've got coming up shortly is the German IFO business climate. Now, for those new to the market, that's probably one of the bellwether numbers to look out for in Europe and European data. Looking at the historicals, this is the previous month. It increased to 110.5 in October of 2016 from 109.5 in September. It was above expectations, was in fact the highest reading since April of 2014. So it was a particularly strong figure here. And what's going to be interesting is, as we start to develop talks on the negotiation of Brexit and get closer towards triggering Article 50, will be how solid can these future forward-looking surveys remain amid those kind of uncertainties, and also with the likes of other European political uncertainties on the horizon as well. So, but last month was an extremely strong reading. I think if I put it down to bars or columns, it will make a bit more sense. That's kind of in the scale of how we've been and performed in 2016. That was a phenomenally strong number last time out. So that would be probably one of the key numbers to look out for in today's session. Be looking at respective European assets on the back of that. Quickly looking ahead towards the US session, obviously there's nothing today, and this is the important part. So the Thanksgiving closures. So when you're talking about volume, you've got to think about it in terms of the pit really drives a lot of the volume. And today, all of the pits are shut, or the main ones you look at. So FX, interest rates and equities in Chicago, and then the New York Stock Exchange is closed. NYMEX will be the same. So all that's open is the Globex, which is the futures that we're looking at. They will be open but will close at the earlier time than normal. So we'll have finished up by then, but it'll be 6 o'clock our time. But it just means then that when you normally get a pickup in volume, like for instance 2:30 at the open on Wall Street, that's not going to happen today. So I guess expectations for the session, I would say look out for this iPhone number in 10 minutes. That will be important. Could offer maybe some opportunity in the Euro and the DAX, depending on how that figure comes out. Otherwise, I'd say keep things tight. Don't have too greater expectations on profit targets and so on and so forth with your trades. Identify good ranges and sound technical levels, and then don't get involved unless the market comes to that point. Again, that's the discipline and patience required on generally more quiet trading days. Okay guys, enjoy the day, and I'll be in the chat room.